Welcome to the Sand to Pearls Stock Market Commentary for Market Week ending Friday, August 29th, 2014. Market breadth. With this past week's market advance, our bull-bear point and figure ratio rose from 1.17 to 1.38, continuing further back into bullish territory. The total count of securities in bullish or bearish patterns rose 1%. To 1,913. The count of bearish stocks decreased 8%, while the count of stocks in bullish patterns increased 9%. The Sand to Pearls PNF Market Breadth Summary Chart shows us a market now 2 consecutive weeks in bullish territory. Paid subscribers have access to the Open Office Calc data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking Membership, and clicking Sign Up. For those who are interested, a free 2-week trial subscription is available. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, rose 145 points for the 9th rise in 13 weeks. At a negative 12.16 points, it continues below all 9 tops above plus 100 and continues above all 7 bottoms below minus 100 in the last 35 months. Market Gauge Volume Analysis. In this week's volume analysis, the Nasdaq 100 ended in neither accumulation nor distribution mode. In the last 2 weeks, it had 1 accumulation day and 1 distribution day. Of the other indexes, both the Diamonds Trust and the S&P 500 Deposit Receipts ended in neither accumulation nor distribution mode. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week also, the Nasdaq 100 ended in neither accumulation nor distribution mode. Momentum. The CCI 20 decreased below plus 100, but continued outside the plus or minus 50 range for a valid zero-line reject long entry signal. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 8 weeks ago, while the daily CCI 20 began a Woody's uptrend 1 week ago. At 128.04, the CCI 20 weekly continues outside the plus or minus 50 range for a valid zero-line reject. Industry rotation the last 2 weeks. All of the top 5 industries are positive, and only 2 of the bottom 5 are negative. Bullish, S&P Retail continues in the top 5. Disk drives and networkers have entered the top 5. Gold and silver continues in the bottom 5. Bearish, REITs and brokers have entered the bottom 5. Semis, Comptech, and banks have left the top 5. Oil services has moved into the top 5. Oil has left the bottom 5. Focus this week from Casey Research. Corporations join droves, renouncing U.S. citizenship. This is a chart from the article, "The U.S. has the highest corporate income tax rate in the industrialized world." And a few points from the article. The U.S. has the highest effective corporate income tax rate in the developed world. Being deemed a U.S. person for tax purposes is like trying to swim with a life jacket made of lead. Why would anyone want to give the destructive bureaucrats in D.C. a penny more than is legally required? As far as I'm concerned, not only is there nothing wrong with going where you're treated best, there's also an ethical and moral imperative to starve the beast. Walgreens is considering reincorporating in Switzerland as part of a merger with Alliance Boots, a European rival. The net effect would be to reduce Walgreens' tax rate 20% down from around 31% now. The move is estimated to save around $4 billion over the next 5 years. What really has the politicians scared is that inversions have started to snowball. Walgreens could be the company that triggers a domino effect. If Walgreens were to move, it would gain a significant competitive advantage against its rivals. CVS, Walgreens' main competitor, paid a 34% tax rate in recent years. Can CVS really compete with Walgreens if the latter is paying 20%? Contrary to the government propaganda, the villains in this story aren't the companies seeking to diversify abroad to remain globally competitive. The villains are clearly the spendthrift politicians who enact these worst in the developed world tax policies, which create very compelling incentives for these companies to leave the U.S. And it's not just multi-billion-dollar corporate entities that have options. Individuals operating on a modest scale can also reap enormous benefits by diluting the amount of control the bureaucrats in D.C. or any country wield over them. International diversification is the solution. A list of suggestions on how to do this follows. This commentary submitted by Donald Pearl, www.s2pmarketsignal.com. Thank you for tuning in for this week's Sand to Pearl Stock Market Commentary. Hoping that you've had a wonderful Labor Day weekend, that you have a fabulous week coming up, and wishing you true success.